1.5 billion in Q1, a quarter-on-quarter decline of rupees 1.9 billion, primarily on account of low revenue of rupees 4.3 billion, which was partially offset by continued cost synergy realization. There were one-off credits of rupees 2 billion during the quarter, mainly related to network cost. Our overall operating costs, excluding license fee and spectrum usage charges, and roaming and excess charges, have reduced by rupees 15.8 billion after adjusting for inflation-driven cost increases and incremental network rollout, as compared to Q1 FY19 pro forma operating costs. This translates into annualized cost saving of rupees 63 billion, which represents around 75% of our stated synergy target of rupees 84 billion. The depreciation and amortization and financing costs net for the quarter are rupees 63.1 billion and rupees 33.5 billion respectively. This includes the effects of Ind AS 116 of rupees 15.9 billion and rupees 6.3 billion respectively. If the impact of Ind AS 116 was to be excluded for each of the quarters and compared, there is no significant change on quarter-on-quarter basis. Pursuant to the recent judgment on AGR by Honorable Supreme Court, we have accounted for estimated liability of rupees 276.1 billion related to license fee and rupees 165.4 billion related to spectrum usage charges up to September 30, 2019, including the interest, penalty and interest thereon of rupees 330.1 billion. This estimate is based on demands received from DoT, which have been adjusted for certain computational errors, and an estimation for the period for which demands have not been received. Whilst the company has provided for spectrum usage charges, considering that no spectrum is used for generating non-telecom income, the company is evaluating the levy of spectrum usage charges on such income. After considering existing provisions of rupees 17.5 billion against this liability and reversal of liability of rupees 83.5 billion towards Vodafone Group, which was recognized at the time of merger for potential payments to Vodafone Group, plus potential payments by Vodafone Group to the company under a settlement mechanism capped at rupees 83.7 billion under the implementation agreement, a charge of rupees 256.8 billion has been recognized and is a part of exceptional items during the quarter. Additionally, as we are in the process of refarming our 3G spectrum for offering 4G services, along with our network integration alignment exercise, we have provided for accelerated depreciation of rupees 40.3 billion on the relevant 3G network assets. In line with the above changes, we have reassessed the recoverability of deferred tax assets, stopped further recognition, and derecognized the deferred tax assets amounting to rupees 139.4 billion recorded up to June 30, 2019. The capex guidance for the year has been revised to rupees 130 billion from rupees 170 billion, primarily on account of savings resulting from better negotiated prices, disaggregation of components while ordering, and reassessment of planned 4G footprint in certain non-priority areas. Furthermore, lower than expected capacity requirement during the year has also resulted in capex deferral to FY21. Thus, the Q2 FY20 capex was at rupees 21.4 billion. Net debt stands at rupees 1,019.1 billion as against rupees 992.6 billion in June 19. The cash and cash equivalents balance as of September 19 is rupees 153.9 billion. With this, I hand over the call back to Janice and open the floor for questions.
Thank you very much. Ladies and gentlemen, we will now begin the question-answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Manish Adankia from Goldman Sachs. Please go ahead.
Yeah, hi, this is Manish Adukia from Goldman Sachs. Good afternoon, and thank you for taking my questions. Couple of questions, please. First, we understand that you've reached out to the government of India for some relief measures, which you highlighted in your opening remarks. Because the payment timeline is a bit tight, how are you thinking about the funding requirement in the interim, and how should we think about, let's say, in the event that the relief measures don't come in the next few weeks, how should we think about how you will address the capital requirement? And second, I think last month, one of your largest competitors, Reliance Jio, they made some changes to tariffs. How are you thinking about your own outlook on tariffs? Because that is something which could potentially result in meaningful increase in your own cash flows. So what is your sense on how we should think about tariffs for Vodafone Idea? Thank you.
Thank you, Manish. Let me first address some part of both of your questions, and then I will ask Akshay to talk a little bit more around the specific details around funding. So, in regards to the government engagement, maybe I'll start off from a little bit from the beginning to say that we have engaged in some ways actually very positively with the government. Actually, our engagements had started even before this AGR case, where we were discussing with them stress in the telecom sector. Now, in our engagements, and we have done engagements all the way from several ministries, many cabinet secretaries, as well as ministry secretaries, as well as various parts of the government. And I have to say that the response from the government, first of all, has been very, very consistent. Everybody has said the same thing. And what they've all said is that they want this sector to be a healthy sector. It is a very strategic sector. It is too important for the country. It is too important for the digital India vision. So clearly, this is something that's very important to the government. Secondly, that they have said to us that they want to see 3 private players and 1 public player in this sector. Again, they have emphasized that consistently. The other thing that they continue to also recognize is that there is stress in this sector, which of course has further been increased because of this AGR ruling. And some of it has caused, or large part of it has been caused due to predatory pricing that has continued in this market. So that's been consistently the government response. Now, in terms of what actions that they have taken, as you may be aware, they have set up a committee of secretaries led by the cabinet secretary himself, I believe. This committee has met several times. We understand that they are close to making some recommendations. Obviously, these are rumors, but we understand that they are getting very close and they have met several times. So we're looking forward to hearing that. Our discussions with them, as I mentioned earlier, have been that we would like to see spectrum moratorium for a period of time, reduction in license fees, also helping us in the areas of GST blockage, as well as a few other things which reduce levies on the sector. At the same time, obviously, on the AGR case, we would like to see the interest, the penalties, the interest on penalties, and those type of things be given relief from that, as well as on the principal amount after adjusted for errors and so on. If we can have some type of a payment plan which spreads it over a large period of time, a number of years, that would be very, very helpful. We believe that the government is taking these requests very, very seriously. We believe that they are working on it swiftly. I also believe that they are looking at a comprehensive solution for the industry, which will restore the health of the industry rather than just a few small requests here and there, which I hope to hear from them, or we hope to hear something from them very, very soon. So that's on the government part. Let me address your second question, and then maybe Akshay can add anything more in regards to specific funding. You had mentioned about where Jio has made some pricing moves. I think I would characterize those as pricing moves. It's not very clear that they have actually increased prices substantially, because clearly many of their plans, they have started to charge for off-net calling, but then they add additional value into the bundles or reduce validity. So in some ways they give something or take away something, and many of these are conditional based on several regulatory criteria and so on. So I think this part is still moving, and these changes continue to be made over the last few weeks. Now, one thing to remember is even with these changes, we are still at a premium to them. Obviously, that varies, price plan by price plan, but for most price plans, we continue to be at a premium to them. But having said that, we continue to monitor the situation and see what happens. Also, certainly based on our discussions with the government, and then looks like some media reports potentially this morning, looks like the regulator may also be starting a review of floor pricing, and I think that would certainly be an important and an interesting thing that could help in the industry. Akshay, anything to add on the funding?
No, so I think at this point of time, this is all that we have to say, and we will await the decision of the government on this matter.
Thank you so much. Just one quick follow-up question. So one of the relief measures that you talked about was offsetting of the GST credit for payment to government. Can you just remind us what is the actual amount of GST credit that is receivable from the government of India?
So at this point of time, our GST amount which is blocked is roughly 7,000 crores.
All right. Okay. Thank you so much, and all the best.
Thank you. We take the next question from the line of Kunal Vora from BNP Paribas. Please go ahead.
Yeah, thanks for the opportunity. First question is, you mentioned that government acknowledges predatory pricing. What's your solution to this? Floor tariffs, considering there are several variables in any tariff plan, how can this be implemented? That's one. Second is, on the VIL's debt excluding deferred payment liability, which is around 28,000 crores, is there a risk that you might need to prepay some part of it considering covenant breaches? Also, is there some pressure in getting vendor financing, especially as promoters do not seem to be willing to infuse additional equity? That's it.
Kunal, let me take the first question, and then I'll ask Akshay to talk about your second question. Actually, I don't really want to speculate on how floor tariffs or floor pricing can be implemented. What we do know is that, of course, this is in the purview of the regulator and the government, and it can be implemented, which is currently in forbearance. Also, at the same time, we know that it has been done in certain other countries in the region, so it's not out of possibility. But I don't really want to speculate on what exactly they would implement or how they would implement that. Akshay?
So, Kunal, on your question of the debt other than the DOT debt, today I think the banks, because of the covenant breaches, have a right to accelerate the payment. From time to time, some banks have requested us whether we can prepay them any amount, and I think we have declined that. And we continue to remain engaged with all our financial creditors, but there is no acceleration of payment that is happening. In terms of vendor financing, we have strong vendor partners, and they are already supporting us through the vendor finance route.
Sure. Just one last question. Can you explain the 83 billion amount, or approximately 80 plus billion, which you mentioned, which might be receivable from Vodafone Group on the contingent liability front? What form it will be, and what exactly the amount is?
Okay, so I understand it's not so easy to understand. So the first thing is that I think at the time of merger, there were some what I may call as contingent assets or largely tax refunds, which were receivable for erstwhile Vodafone. And the agreement was that as and when those tax refunds are received, they would be paid by VIL to Vodafone Group. That amount, after some minor changes over the period, is currently standing at about 83.5 billion. That is a liability which was tending to the credit of Vodafone Group. Okay. Also, as a part of, again, the implementation agreement, there is an understanding that if there are any crystallization of pre-merger contingent liabilities, then there is a settlement mechanism agreed between Vodafone Group and VIL. Now, as a part of that agreement, also the payment by Vodafone Group to VIL is capped at 83.7 billion. So, on one level, the liability of 83.5 billion to Vodafone Group, which was created at the time of merger, has been written back because the cap on receivable has been applied. And secondly, a new receivable has been created from Vodafone Group in case this payment was to be made to the government. And hence, in all, there is a credit of about 167 billion against the liability, which is totally about 420 billion, net of the provisions already existing. I hope that answers your question.
Not like completely, but I'll try to take it offline. Thanks for the responses.
Thank you. We take the next question from the line of Pranav Shastriya from Edelweiss. Please go ahead.
Hi. Thanks for the opportunity. A couple of questions. The provision what has been computed, it is said that the penalty adjusting for certain computational correction. Can you quantify what are the computational correction adjustment? Second thing is what is the rate of interest used for computing the interest on the AGR liabilities, and how much difference will it make if that comes down to, let's say, VIPLR?
Okay, so in terms of the computational errors, let me put it this way, that over a number of years, the audit has been conducted or assessments have been done by DOT. Now, the most major correction is like this, that there was this discussion about whether pass-through or interconnect charges should be deducted on accrual basis or cash basis. All our filings in terms of annual returns have been basis the accrual. Now, whenever these assessments have been carried out, whatever was not paid during a year has been disallowed. The consequence of this is that over a number of years, there are lots of disallowances of amount which was claimed as accrued but not paid during the year. However, the corresponding correction in the subsequent year's assessments of what was accrued last year but paid this year has not been done. So I would say this is the largest correction which is there. There are some other items also, but I think this is the main amount which is resulting in the correction. In terms of your question on interest rate, roughly I remember in the initial years it was close to about 18%, and the way it is calculated, it is compounded annually. I believe in the more recent years there was some change in the license conditions, so it is in the ballpark of about 12.5%, again compounded annually. While I cannot give you a figure for what would happen if the interest rate were to reduce or not compounded like this, but it will be significant for sure.
Okay, thank you. That's it from my side.
Thank you. Next question is from the line of Sachin Salgaonkar from Bank of America. Please go ahead.
Hi, thank you for the opportunity. I have 3 questions. First question to Ravinder. Ravinder, since you've taken over, would like to understand any change in strategy, what you sort of looked and implemented. Second question is, we now see your other equity becoming negative. So any more debt covenants getting triggered on the back of it, and if you could share what are your debt covenants, that would be helpful. And third question is, Akshay, I remember you mentioning last time that your capex guidance has a bit of a downside risk. Any clarity on that would be helpful.
Okay, Sachin. Thank you very much. I think overall to say that there's really no significant change in strategy. What I'll probably do is tell you a little bit more about where our focus has become a little bit more tighter and narrower. So clearly we are towards the tail end of our integration. So I think it's very, very important, and we have continued to accelerate and continue to move up the date. And now we are targeting that by March 20, integration in most of the circles will be done. And I think we are working very hard to get that done there. I think that is certainly one of the more important and top strategic priority for us. Of course, along with that automatically comes synergies, delivery of synergies and operational efficiencies, building of more capacity and coverage and all the other things that I talked about in my opening statement. Within other operational areas, we have really started to focus quite strongly on 4G unlimited customer area as well as ARPU growth. As I again mentioned in my opening remarks, we are starting to see good traction of that, certainly in the circles where we have completed our integration and in circles where we are, as we go district by district, in our stronger circles, we start to see better traction there. And I think that has been very, very positive. Again, September was quite good towards coming out from Q2, and then October has turned out to be even better, that has continued. So I think we are starting to see traction there, and our focus is very much in that area. And then similarly, we are also very focused on churn reduction, which is obviously will drive better numbers on one side. Then I think the other priorities, which are clearly now have taken much more front seat, is our engagement with the government and relief for the sector. And I think that has turned out to be a very, very important element, and we continue to do that. I think there is significant opportunities to reduce this predatory pricing position that we have been in for several years. And I think, of course, that has a huge impact, not only just on us, but obviously on the overall industry. And then we continue to work on asset monetization, industry merger closure, and several other things. So I would say these are pretty much our operational and strategic priorities, and as you would imagine, not a huge change from where we were earlier.
Yes,
sorry, go ahead.
So just a small follow-up out here. I think the one number which we are looking is your overall revenue growth, or the overall absolute revenue. And since the integration has started, it has not inched up. So are we at a point where this number bottoms out or has already bottomed out, and going forward we will see the revenue inching up?
So as I mentioned, I think we are starting to see some green shoots. Again, exit for September was positive. October has also trended in the same place. So I think we are going in the right direction. And maybe a bit too early to say whether it has bottomed out, but I am more hopeful that trend has started. Now, I think what is important, Sachin, to remember is that we started integration in what we would call our weaker markets. And while there we learned a lot from integration, and we are applying those to our bigger circles, clearly, there the impact takes a longer time because we were weaker in those circles to start off with, and to build perception and to improve customer experience as well as get traction takes longer time. We are now starting to see better traction in that. In fact, we are seeing better performance on 4G area, for example, in our already integrated circles. And I think that is a very positive sign. And as we integrate our stronger circles, which is what I talked about, the 8 circles where we are strong, both brands are strong for the most part, or we have good market share and good presence, and when we start to see districts, we are already starting to see positive impact there. So I think we have all the right signs for a positive trend. Obviously, we will see where we go from there. So it's hard to tell exactly in that bottom, but we are seeing positive trends.